everyone. Let's take a look at a couple of trades I made in crude oil today. Today is December 27th. It's a Monday. Let's see what happened in crude. So here you have a couple of nice green candles in the 30 minutes chart. So let's expand this. The mood in crude is to the upside again. So it was moving. So the bias on the last days has been to the upside here. See, so it's been moving up, making higher highs and higher lows, and then today before the market opened, I saw that this Darvas here was trying to break to the downside. It was a little bit premature, the trade I made, especially because of this first attempt to break in this candle right here, that white one there. Tried to make a break and then it came back up, and then uh, moving averages are stuck to the downside, so I thought that this could break again, and I took the risk right at before the Darvas broke. Probably a mistake, but I took the trade. And then the second one was in this candle here when it started to move to the upside. So let's look at the entry chart. I'm gonna move here. So here is where let me expand it a little bit so we can see what happened better. So I was looking at this. I'm gonna put it right here so you see what I was kind of analyzing, right? So we have this candle here. Everything was kind of like telling me that it was going to make a move, probably to 72.57. We're at 72.72 here. So what I did, and then we have a support right here in S1. So the next candle up, I took the trade right there, and moved one tick below, and then kept moving and then reverse. And when it reversed, I sold it right there after it this break closed. So one brick one brick in my against me, and I sold it. I sell. So this one was actually a loss for $210 right there. Okay, 3 lots. So I took 3 lots today. So full loss would have been $300. But since I moved the stop, if the candle moves, then it was 210. Now the market started to move up right in here. But if you see, I have in the 30 minutes in the left side, I do have the yellow 50 moving average, which is most of the time it is a resistance, right? But it should have been good to take the trade right here. Riskier because of the 50 moving average, SMA, simple moving average. But it should have been a good trade. All the other things were good. Momentum is it's positive. These moving averages are moving to the upside, and then the RSI is also pointing up right here. So this should have been a good entry. It moved up, then came down, and then moved up. This looks a little bit dramatic when it's this big, but it has a good rally before the market open, and right after crude goes to open at now we were looking. I was looking at this level here, which is the previous the prior day high, right? And so when it broke right there, I took the trade, and this one was good. So the first two lots were sold for $100 each, so $200 there, and the rest for 70 total was sold right when this in this candle here when it painted two red bricks. Now I could have entered this one as well, but I didn't feel that lucky today, and probably a mistake. But well, it was a mistake, but because it kept moving, but I didn't took it. And especially if you see all the signs are pointing up, everything looks good here. A little bit of retracement in this moving averages here. Let me expand this a little bit so you can see it better. A little bit of retracement there, but then resume to the upside. So this candle would have been good, and then another, would have been a good trade there. Okay. So market kept moving down. Market kept moving up. I'm sorry, I had a phone call. Um, and then went all the way to resistance 3, and then the mid resistance 3 actually. I have resistance 3 right here, and then the mid in between resistance 2 and resistance 3 is right there, and that is where the congestion area happened. And then at the end of the day, market started try to move up, made this move, and then came back. All right. Um, I think that would be the two trades I made. So crude today was for $560. Thank you for watching.